Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm going to start the problems on set off and carry forward of losses. Last video, complete explanation I have given. Two videos I have given the complete explanation regarding the provision of Income Tax Act 1961 regarding set off and carry forward of losses. Already in detail I have explained. So if you have watched those two videos, easily you can understand the problems. Otherwise, every problem will be difficult for you. So my suggestion, go to the playlist of my channel, select the subject Advanced Aspect of Income Tax, watch the video on set off and carry forward of losses. Then you come to this video. Definitely you can be able to get a good grasp on the problems of set off and carry forward of losses. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout and keep it ready before watching this video. Take a screenshot of the solution of the first four problems. First three problems I have given on the board. Note it down. Then I'll explain each and every point of the problem. Come on viewers. First problem. Compute total income and tax liability of Sri F.D. Khan. So we are required to compute the total income as well as tax liability. Small problem. Income from business 3,75,000. Loss from self-occupied house 2 lakh. And income from other sources 6,30,000. It's a very small problem. Only three sources are given. Income from business. There is a loss on self-occupied house. Inter-company set-off. Inter-head set-off. Inter-head set-off. The loss from self-occupied house can be deducted from income from business, income from other sources. 2 lakh rupees is given. So from the assessment year 2018-19, the maximum limit is 2 lakh only. So 2 lakh rupees deduction we can give. So solution of this problem, Sri F.D. Khan, computation of total income. Income from business is given 375. Income from other sources 6,30,000. Added both 10,05,000. From this deduct loss from self-occupied house 2 lakh. So total income will be 8,05,000. This is the total income. Now computation of tax liability. Slab. First slab up to 2,50,000. So many problems in the last video I have explained you how to compute the tax liability. So up to 2,50,000, income is 2,50,000 nil because basic exemption limit is 2,50,000. No tax up to 2,50,000. Over 2,50,000, so 2,50,000 1 rupee to 5 lakh. This is the second slab. The income comes to 2,50,000. The tax rate is 5%, so 12,500. The third slab is 5 lakh 1 to 10 lakh rupees. But our income is not going up to 10 lakh. Our income is only 8,05,000. So I am taking the balance. So 8,05,000 minus 5 lakh, 3,05,000, 20%, 61,000. So total tax liability is 73,500. To this we add health and education cess 4%. See here, tax rebate is not allowed because the income is over 5 lakh. And surcharge is not applicable because the income is below 50 lakh. So no surcharge, no tax rebate. Directly we add 4% health and education cess. So tax liability 76,440. That's it. This is the end of the first problem. Now second problem. From the following income particulars of Srimati Sangeeta Chopra, calculate total income and tax liability. Again. So see here, Srimati Sangeeta Chopra, computation of tax liability, one by one we'll see. Income from let out house 2,80,000, loss from self-occupied house 36,000. Intra head set off. Let out house, there is an income. Self-occupied house, there is a loss. The loss of self-occupied house can be set off from the income of let out house. So you can see income from house property. Income from let out house 2,80,000. minus loss from self-occupied house 36,000. Deduct, we'll get 2,44,000 is income from house property. Next one, short-term capital gain 3,89,000 and long-term capital loss 1,20,000. Last video I have explained you the long-term capital loss cannot be set off from short-term capital gain. The long-term capital loss can be set off only from long-term capital gain. Otherwise, it will be carried forward to the next year. Next year, if there is any long-term capital gain, it will be set off. From no other income, this long-term capital loss should be set off. So here, don't consider long-term capital loss. Only note we will give. The short-term capital gain is 3,89,000. Remember, short-term capital gain is a normal income. Slab rate will be applied on short-term capital gain. So add up total income, 6,33,000 is the total income. Now computation of tax liability. First slab up to 2,50,000 nil. Second slab 2,50,000 1 to 5 lakh. 2,50,000 is the income, 20%, 5%, 12,500. The third slab 5 lakh 1 to 10 lakh. But our income is not going up to 10 lakh. Our income is only 6,33,000. So I am taking balancing figure. Balance. So 6,33,000 minus 5 lakh will get 1,33,000 balance, on which 20% tax, 26,600. So tax liability is 39,100. So tax on total income 39,100. To this we add 4% health and education cess. So 4% of 39,100, 1,564. So 40,664. This is the tax liability. But according to the provisions, it should be rounded off to the nearest 10 rupees. The last one 64. So we make it 60. If it is 65 or more than 65, we would have taken 70. But if it is 64, we will take 60. So 40,660 is the tax liability rounded off. A note, long-term capital loss cannot be set off from short-term capital gain. It can be carried forward to the next year and can be set off only from long-term capital gain. That's it. 2 problems completed. Now, problem number 3. Srimati Lata Devi has submitted the following particulars of income. Compute tax liability. So first we calculate total income, then only we can be able to calculate the tax liability. So income from let out house, urban. Income from let out house, rural. Loss from self-occupied house, 44,000. Whether the income is from urban area or rural area does not make any difference. Income from house property, whether it is in urban area or rural area, it is equally taxable. So we add up income from let out house urban, income from let out house rural. We add up both the incomes. From that we deduct loss from self-occupied house. Now you can see. Srimati Lata Devi, computation of total income. Income from house property. Income from let out house urban, 3,65,000. Income from let out house rural, 78. Total 4,43,000. Minus loss from self-occupied house, 44,000. So 3,99,000 is the income from house property. Now, income from manufacturing business, 7,20,000. Loss from car distribution business, 3,45,000. Both are non-speculative business. So we can set off. The loss in car distribution business can be set off from the profit of manufacturing business. So income from business. Income from manufacturing business, 7,20,000. Loss from car distribution business, 3,45,000. So deduct 3,45,000. 720 minus 345. 375 is the income from business. Now last one. Short-term capital gain, 1,20,000. Long-term capital gain, 72,000. Both are capital gain. One short-term capital gain and one long-term. So we add up short-term capital gain 120, long-term capital gain 72. Total capital gain 1,92,000. Now take the total in the last column. 9,66,000 is the total income. But remember, long-term capital gain is a special income on which there is a flat rate of tax of 20%. On LTCG there is a flat rate, whereas other incomes there is slab system. So for computing the tax liability we segregate. 9,66,000 is the total income, in which how much is the LTCG? 72,000 is LTCG. Deduct 72,000. So total income 9 lakh 60 minus LTCG 72. So 8 lakh 94,000 is called normal income. And on normal income, slab system will apply. And on LTCG, flat rate will apply. That is the point. That point you have to remember. Now, tax on normal income, slab income rate tax up to 2,50,000 nil, no tax. 2,50,000 1 to 5 lakh. The income is 2,50,000, rate of tax 5%, 12,500. The third slab goes from 5 lakh 1 to 10 lakh, but our income is not going up to 10 lakh. Our income is only 8 lakh 94,000. So I am taking balance. Total 8 lakh 94,000 minus 5 lakh. First slab, second slab. First slab 2 lakh 50, second slab 2 lakh 50, 5 lakh. So 9 lakh, 8 lakh 94,000 minus 5 lakh, 3 lakh 94,000 is the balance. On this balance, 20% is the rate of tax, 78,800. Take the total, 91,300 is the tax on normal income. Tax on normal. To this we add tax on LTCG. How much is the LTCG? 72,000. 20% of 72,000, 14,400. Tax liability 1,05,700. To this we have to add health and education cess 4%. So 4% of 1,05,700, 4,228. Add up 1,09,928. 1,09,928. Now we have to round it off to the nearest 10 rupees. The last two digits you see 28. So we can round it off to the next 10, that is 30. 28 we have to make it 30. So 1,09,930 is the tax liability rounded off. So in this video I have explained you 3 problems regarding set off of losses. Inshallah, the next problem will continue in the next video. So 3 problems we have completed. Now I am continuing the problem number 4. So before starting the 4th problem, take a screenshot of this solution of 4th and 5th problem. Then I'll explain each and every point. Come on, see the 4th problem. The following particulars are submitted to you. Compute total income and tax liability of Srimati Geeta Rani, super senior citizen. For super senior citizen, the basic exemption limit is 5 lakh rupees. Already we have done so many problems in the previous videos regarding computation of tax liability. The super senior citizen, those who have crossed 80 plus age. Then profit from toy business 8,10,000, profit from petrol bunk 5,21,000. So both toy business and petrol bunk both are non-speculation business, and both non-speculation business have profit. Speculation business gold loss 1 lakh, speculation business silver profit 20,000. So here he is having 2 speculation businesses, one gold business, another silver business. There is a loss in gold 1 lakh and there is a profit in silver 20,000. So we can set off 1 lakh rupees loss, 20,000 rupees profit. So 1 lakh minus 20,000, 80,000 rupees is the speculation loss. 80,000 rupees the speculation loss, which cannot be set off from any other income. It should be carried forward to the next year. In the next year, if there is any speculation profit, from that speculation profit, this speculation loss can be set off. And income from other sources 4,84,600. Now, Srimati Geeta Rani, super senior citizen, computation of total income. Now, income from business, profit from toy business 8,10,000, profit from petrol bunk 521. Total business income is 13,31,000. Now, speculation, this is non-speculation. Now, speculation business, speculation loss in gold 1 lakh and speculation profit in silver 20,000. So loss 1 lakh, 20,000 profit. So how much is the net loss? 80,000 rupees is the net loss in speculation. And this 80,000 net loss will be carried forward to the next year. speculation loss to be carried forward. It cannot be set off from any other income. Then last one, income from other sources, 4,84,600. Take the total, 18,15,600 is the total income. On this total income, we are required to find out the tax liability. Computation of tax liability, slab. The first slab is 5 lakh because she is a super senior citizen, 80 plus age. So 5 lakh rupees the first slab. Up to 5 lakh rupees income, no tax. Second slab from 5 lakh 1 to 10 lakh. The income is 5 lakh and the rate of tax is 20%. See, a 5% slab is not there for super senior. For super senior, 5% slab is not there. Directly basic exemption 20%, 30%. So 5 lakh 1 to 10 lakh, 5 lakh rupees income, 20%, 1 lakh. Now balance. The total income is 18,15,600. From 18,15,600 deduct 10 lakh. So 8,15,600, 30%. 244,680. So total tax is 344,680. To this we add 4% education cess. Now tax liability will be 3,58,467. Now we rounded off to the nearest 10 rupees. So 67 will become 70. 67 will become 70. 3,58,470 is the tax liability rounded off. That's it. Now come to the fifth problem. Mr. Krishnamurthy, age 61 years. 61 years means senior citizen. 60 plus is senior citizen. Senior citizen basic exemption limit 3 lakhs. So submitted the following particulars of income, compute total income and tax liability if TDS tax deducted at source is 1,28,000 and advance tax paid is 2,60,000. So this TDS and advance tax will be deducted from tax liability. So while computing tax liability, after calculating tax liability, we deduct TDS, we deduct advance tax. Now income from let out house 2,07,000, loss from self-occupied house 28,000. So income from house property, profit from let out, income from let out and loss in self-occupied. Mr. Krishnamurthy, age 61 years, senior citizen. Now income from house property, income from let out house 2,07,000 minus loss from self-occupied house 28,000. Deduct 28, will get 1,79,000 is the income from house property. Profit from bakery business 11,02,100. Profit in speculation business 8,52,700. So we are having the profit in non-speculation and also profit in speculation. Both are profits. Both are business incomes. So we add up. The profit in bakery business and profit in speculation. Total income from business is 19,54,800. Now take the total. Total income is 21,33,800. This is the total income. On this total income, we are required to calculate the tax liability. Calculation of tax liability. The basic exemption limit for senior citizen is 3 lakh because 61 years of age, senior citizen. The first up to 3 lakh rupees, 3 lakh income nil. Second slab 3 lakh 1 to 5 lakh. The income comes to 2 lakh. On that 2 lakh, 5%, 10,000. 5 lakh 1 to 10 lakh. Third slab. The income is 5 lakh. 20%, 1 lakh. Now balance. Over 10 lakh rupees, 30% is the rate of tax. What is the total income? 21,33,800. From 21,33,800, deduct first 10 lakh. 3 lakh plus 2 lakh plus 5 lakh, 10 lakh. So 11,33,800 is the balance on which 30% is the rate of tax. So total tax liability is 4,50,140. This is the tax on total income. To this we add health and education cess. Surcharge is not applicable because the total income is below 50 lakh. So health and education cess 4%, 18,006. Add up 4,68,146. This is the tax liability. From this we deduct TDS. The less tax deducted at source 1,28,000 deduct. Advance tax paid 2,60,000 deduct. So tax due is 80,146. 80,146. Now we round it off to the nearest 10. 46 will become 50. So 80,150 is the tax due, still payable. Now, here one more item is the long-term capital loss 10,580. Already in the previous problem I told you long-term capital loss cannot be set off from any other income. It can be set off only from long-term capital gain. So otherwise this long-term capital loss will be carried forward to the next year. In the next year, if there is any long-term capital gain, then it can be set off. But from other incomes, the long-term capital loss cannot be set off. So this is the end of problem number 5. So totally 5 problems I have completed on set off and carry forward of losses. Inshallah, the next problem will continue in the next video. But before that, I want to inform you again that I have started a new channel by name Khan's Accounting Institute. This is the channel name. So please, my request to you, go visit to this channel, Khan's Accounting Institute, and watch the videos, enhance your knowledge. This channel I have specifically made for IGCSE students. It will be very much helpful to IGCSE students. Anybody can watch the videos. You can enhance your knowledge. You can increase your knowledge. And do subscribe my second channel also. Inshallah, we'll continue the next problem in the next